Hey everyone, welcome back to my channel, Canadian Whiteboard Finance. My name is Galen Nuttall. This is a place where I take complex financial concepts and make them simple. I draw them out on a whiteboard. My hope is that it will help Canadians make better informed decisions with their money, understand better their options when it comes to saving and investing and financial planning in general. Now today is the ultimate smackdown. This is one of the most hotly debated topics in Canadian financial planning, which is the TFSA versus the RRSP. A lot of times people will say that one of them is categorically better than the other one. So the tax-free savings account versus the registered retirement savings plan. What I'm going to do is I'm going to line them up side by side. I'm going to talk a little bit about how they each work. I have videos of each of them, but this one is the one where I compare the two together and talk a little bit about who should have which one and who should not have which one, because they're not right for everyone. So I'm going to turn on my whiteboard here. Tax-free savings account versus registered retirement savings plan. I'm just going to say RSP and TFSA. It's a lot faster. So here it is. I'm going to stack them up next to each other, talk a little bit about them. And really this is for anyone who's confused about the difference, kind of wondering which one makes more sense for them, which is exactly the situation I was in before I became a financial planner. I did not know, I found all these acronyms, TFSA, RSP, LIRA, all these things. I found them very confusing. So happy to share what I've learned and the questions I've gotten over the years. So first off, the year that started, tax-free savings account is relatively new, started in 2009. RSP has been around a lot longer, 1957. Just as a side note, anyone who was 18, by the age of 18, living in Canada by 2009, and a Canadian resident, has started, they could have opened a TFSA back then and kept it going and have full room. RSP, 1957, there are people, typically, when I sit down in front of people, in a certain age range, they have a lot more money inside of the RSP than the tax-free savings account, but younger people tend to favor the TFSA. Next, tax credit. So is there any tax advantage to putting money into the TFSA? No, you don't get any tax credit for putting money into. You don't get any, tax back or anything like that. With the RRSP, you do get a tax credit. The money that you put into it reduces your income in that year, so you pay less income taxes. Limit. What is the limit based on? So the limit of the TFSA, it is based on just how old you were when the TFSA started. So in 2009, so you can open a TFSA as soon as you turn 18. And if you were 18 in 2009 or older, that means you have the full room. If you were not, then you don't have the maximum available room. But each year it will, the amount you can contribute to, there will be a number tacked on every year. RSP, your limit is based on your previous income. So 18% of what you make to a maximum, your previous income, that's what dictates how much you can put in. So this is an interesting one. The tax-free savings account. Do you ever get to an age where you are forced to take money out of your tax-free savings account? No. You can leave it there for the rest of your life. If you don't need the money, you can just leave it in there. You don't have to take it out. RSP, yes. When you're turning 71, you got to be looking at the year that you turn 71 to start taking money out of your RSP. You have to turn it into something else. It's turned into what's called a RIF. And once you turn it into a RIF, you have to start taking a minimum out every year. The idea behind that being that you take out a higher percentage every year, and it pretty much depletes in retirement, so that once someone is in their 90s, it's pretty much gone. So from 71 90s, you can take it out earlier, but you're not forced to until that age. Name a beneficiary. So this means that can you put someone's name on your TFSA? Like, for example, spouses usually name each other if they manage their finances together. Children, grandchildren. The answer is yes, you can name beneficiaries on both accounts. So advanced planning, obviously talk to the people you're working with, but usually it does make sense to make the most of the beneficiaries, because that way that doesn't have to go through the will or the estate. One thing I'll say quickly is TFSA, RSP, they're just two pieces of a bigger puzzle. So if you're interested in knowing more about the full financial planning process, be sure to check out my link at the bottom in my description. You can download your free guide to Canadian finance, 30-minute guide to Canadian finance I put together. Basically take you straight through the process I take my clients through for investing and full financial planning. That's free. Click on the link. You'll have a chance to get it. And let's talk about the rest of the comparison, the smackdown. Next, the growth. So the growth on a tax-free and a TFSA, it is what's called tax-free. If you put money in and it grows, you do not have to pay any taxes on the growth. You don't have to pay any taxes when you take it out. On the RSP, it's what's called tax-deferred. you get a tax credit, but you will be paying taxes under almost all circumstances when you take it back out. The idea being that you put it in when your tax is high and you take it out in retirement when your taxes are a bit lower. When can you start? You can start when you're 18 for the TFSA. For the RSP, it's as soon as you start making money. As soon as you start claiming income, you can start. So yeah, it could be whenever you get that first job and you're actually making money. When your income starts, T4 income, that's when you can start contributing to an RSP the next year after your first year of making it. Now to talk about whether there's an age up until which you can contribute to the tax-free savings account. Tax-free savings account, nope, you can put it in the rest of your life. RSP, no, you have to stop. The year that you turn 71 is the year that you have to stop putting money into it. You can't put any more money into it after that. Most people just contribute while they're working. Not a lot of people continue putting money into it after they're done working, but that is when you would have to stop. Access, so there's really just one way to get your money at your tax-free savings account is you take it out, withdraw, and then with the RSP, you can technically withdraw. You can, I'm going to run out of room here. You can withdraw, just like take the money out and use it. You can borrow against it to buy your first home. You can borrow against it to for adult education. It's called the Lifelong Learning Program. So there's different ways you can access it whereas the TFSA is very straightforward. American, this is the last little bit. Should Americans have tax-free savings account? As always, talk to your own financial advice people, but generally when I've talked to accountants that work with cross borders, they say no. The tax-free benefit of the tax-free savings account is pretty much eliminated if someone is an American. An RSP, yes, an American can have RSPs, and it doesn't. It's fine. It doesn't. It still has the same tax advantages, and so obviously being that's something that comes up if people are dual citizens or a citizen of one country and a resident of the other, that sort of thing. Perfect. So I hope that helped a little bit compare the two accounts when it comes to how each one of them works. So RSPs usually make more sense for people who are not going to have pensions. I see a lot of, and which is more and more common. I mean, less and less people have pensions nowadays. So people who have really nice pensions, it doesn't usually make as much sense because then when they go into retirement to take the money out, they're still paying a lot of taxes on it. People who don't have pensions lean towards the tax-free savings account, unless they're an American. Then they probably shouldn't do it. So it's not a clear-cut winner or loser in the TFSA versus RSP debate. Another example is business owners who take money out specifically to put money into their tax-free savings account. There's much better options for them usually. So that's one group of people I help with. So when someone says everyone should have a TFSA or everyone should have an RSP, it's really not the case. It does depend on the specific situation of the individual. So if you'd like to learn more, be sure to check out my guide in the description below. You can download the free guide, 30-minute guide to financial planning for Canadians. It's a guide I put together that takes you through the same step-by-step process that I take my clients through. And while you're waiting for the next video to come out, check out, actually I'll do it on this side this time. Check out, see if I got it over here. Check out my video which is more in depth about the RSP and more in depth about the TFSA. So you can learn a little bit more in depth about each one of those, expand upon some of the things I've talked about in today's video. Thanks again for joining me, and I'll see you in the next video.